Afternoon all, how are we doing? How are you this afternoon? Afternoon Ian, Outro, Kennelly, Julio, Fletch, Crumb, Peter, J Trader, Gregors, Mumo, Virginia, Amy, Monkey, how are you doing? So we had some news this afternoon. A little bit of news on the US, all positive, all good. Well, unemployment claims are down, which means more people are in work. The unemployment change is up, which means more people are in work. So yeah, that was it. Exciting, hey? We've had a bit of movement, but not a massive amount. So a little bit of a bull run on the US, but ever so tiny. Hardly anything, really. Main mover of the day has been the euro. And we've had some New Zealand movement as well. So New Zealand dollar has dropped a little bit, but nothing has gone anywhere, as you can see. It's just a fair old bit of movement, which is good because lots of ADRs. So yeah, banked a little bit this morning. Just waiting for everything else at the minute. So yeah, we'll have a look at that in a sec. The DAX this morning. We had nice clean breaks this morning on the European indices. So pre-market on the DAX, straight into TP2, TP1, and then taken out on the second half on the trailer. So banked $250 odd there. FTSE, pre-market, straight up, hit target, and then went up to 3R, and then came back, took me out on the trailer. So we didn't go anywhere. But the initial cash balance paid us, so it's lovely this morning. Very nice and easy money. And so 500, just over $500 up on the morning with the SIHEA. So that's good. So basically today's news obviously is all gone now. We're out. We're done with news. So we had the German CPI came out as a 0.1. Instead of a 0.2. So inflation has gone up, which is what we were expecting, although not quite as much as they were expecting. So it's difficult to really read anything into that at the moment. But the Euro's had a little bit of a flip-flop on it, but nothing particularly excessive. And obviously, we've had the positive news on the US. So that's it. So non-farm payroll and the unemployment rate for the Canadian and the US tomorrow. But apart from that, the news is over today. So if we have a quick look before the market opens at movement today. So we've got a lot of yen movement again. So very weak yen. So I took that Aussie yen off this morning. So yeah, very weak yen again. So we've had an ADR hit on the Aussie yen. The CAD yen, again, ADR hit to the upside, 125 ADR. That was that resistance level we looked at this morning. It bounced off of it as we would expect, and then it's flying through. So massive moves on these yen pairs to the upside again. More weakness, but I don't think that will be sustained. Euro yen, we're up at resistance right now. Good entry there and there. Nice resistance. So lovely big 2-day push. We would expect a pullback of some description on that, back into that propulsion gap at least. So just waiting for some sellers to step in on that one. CAD yen looks like a really good short that. And it's extended on the hourly. So I'm probably going to get into that actually, if I'm not already in it. Yeah, so I'm already short 3 pairs. I will be getting into a CAD as well. So that's nicely extended. And the US dollar yen as well. So mostly about the yen today, and another good hit potentially to the upside coming on that one as well. Back up to 145, which is quite a key level. The rest of everything movement that we've had has been New Zealand yen, New Zealand and euro based, but still going at the moment. So they really like the euro. They liked that news. With the inflation figures. So that means because inflation has ticked up, it puts a little bit more pressure on keeping rates high, which puts rate drops back, which is bullish currency. So we are getting a bullish move off of it, which is what it should be. But it is slightly below target. So whether it's sustained or not, we'll have to wait and see. But Yeah, nice moves to the upside. As you can see from the euro US dollar, the US dollar move is stronger than the euro move. So that's what's moved this morning. If we look at the indices, why am I on the daily there? We were looking at the daily this morning, weren't we? If you look at the indices, the Dow hasn't really gone anywhere. So NASDAQ, we're dropping at the moment. We've not got to ADR, so I think there's plenty of movement left in the day. The Dow hasn't gone anywhere at all, and the S&P is coming down as well, but again, not hit ADR. So the news event hasn't actually put a massive move in. As you can see, we haven't really gone anywhere. So we should get a nice open at the moment. Sorry. Brian, are you in here? No, different Brian, isn't it? Sorry. Different Brian. Somebody's saying their stock index hedge isn't working yet. It's not open yet. Give it a chance. Got 2 minutes. So we'll watch the open, see how we get on. So again, we had a down day yesterday. Sorry. Jesus. So yeah, market's not open yet, Brian. If you're in live stream, different Brian that's in Telegram. Wait for the market to open. So we had a down day again yesterday, not particularly big. Dow was a bit bigger, but that was all pre-market, a lot of that movement. So yeah, could go either way today. Nice tight range on the Dow. So we'll just be watching to see what happens at the open. Selling off quite hard on the Dow ahead of the market open, which is a bit tricky, but we're just watching for levels coming up that may act as support resistance. And we'll see where we go. So short on the Dow. Ooh, that's quick. Violent move this morning. Look at that. Busy market this morning. So yeah, a lot of volatility coming in. Wow, a lot of volatility coming in. Look at that Dow move. Big volume coming there. So yeah, we'll see where we go. Sorry, just talking to somebody. Why do people not utilize the live room, right? I'm running live the product the guy is trying to get support on, and he's using Telegram. Why not just come in here and ask the question? Don't get it. Afternoon, everybody else that's come in. Neo, Emac, Igosa. Neo, Emac, Igosa. Brian, missed out. Yeah, the other Brian. Yeah, I'm in the live room. Brian, must have seen me use this on a daily basis for months. Nothing happens until the market opens, because it needs to do the calculations when the market opens. I'm keeping calm. So yeah, we'll see where we go. So short on the NASDAQ, short on the Dow. No entry yet on the S&P. So we basically double bottomed off that pre-market low. Hedged on the NASDAQ. Oh, not quite. Just about to, I think. There we go. Hedged on the NASDAQ. Hedged on the Dow. No trades yet on the S&P. So we'll just see where this goes. A lot of volume coming in today in both directions. So let's have a look at these two for targets today. So with the NASDAQ, obviously we're in the middle of a pullback at the moment. So we had that initial leg up that started in November, all the way through November into the beginning of December, and then they had that December rally. So this is a pullback, 50% roughly of that leg that we've got going in on the NASDAQ now. So your closest potential support area is this area here. Cool, that's loud. Which is 125 ADR today. So we're looking for a push back down into that area. So that's pretty That's a pretty decent support, actually, looking at where the actual 5R target is. Probably up a little bit. So I'm just going to move my target up ever so slightly, just above that monthly level there, which is November's high. So that's just beyond ADR today. So if we can get pushed down into ADR today, I'll be looking for a support bounce somewhere around there. So that's beyond ADR, and then look for a pullback to get out of the NASDAQ. Upside, very difficult to pick an upside target on this today. I mean, that is the previous day's low, which is within ADR. And then we've got this area here, which is basically the high so far today. So we're likely to find limit orders triggering at that high because that's where we sold off from. So if we can get up to there, we'll probably find we get a reaction, even if it is going to rally longer. So just going to move target down on the upside just below that high. The Dow, oh god, all right, S&P's gone long. Let's hope this rallies today. The Dow, upside target, don't have a problem with that propulsion gap being the target to the upside, so I'm going to leave that exactly where it is. Downside, again, very difficult with this Dow at the moment. Obviously 150 ADR is that weekly low here from 2 weeks ago. That's last week's low, so that's 2 week ago low. So downside, I mean, it could go absolutely anywhere, couldn't it? So I'll probably leave it where it is, around about the 5R mark, and see if we can get pushed down towards ADR. So looking for a push up, 3/4 of an ADR up or down today, to try and get out of the Dow. S&P basically at the moment is a long only. So we'll see if we can get a rally to the upside. There we go. What's causing the CAD to be strong? I feel an Edge 209 day ahead. I don't know what that is, Brian, but is it good? I don't think it will be good. It wasn't good, was it? Ed 209. He was bad. Yeah, it could be an Ed 209. Triple hedge. Good job I banked $500 this morning, wasn't it? So, yeah, we'll see what happens with these. So there's your initial 5-minute opening ranges in. 5-minute opening range, very big on the Dow. 86. That's well over 20% of ADR. And your 5-minute open is 46. 463, yeah, so that's well over 20%. So that initial cash balance that went in today, absolutely huge across all the indices. Same with the S&P. Max range was 86. We put a 95 in. So if you didn't take the pre-markets today, you won't be in anything today because these ranges are all too big. If you're using 20% of the range as an entry level. So see where we go. Yeah, CAD strength, that'll be based off the back of the US dollar, basically. US dollar yen 150 ADR, and the pound yen 125. So this yen is rallying again. Another leg up. So I had, if you were here in the live room this morning, I took a manual entry up here because it looked like the reverse alert was going to be too low, basically, to get out. So the EA actually did trigger an entry on this morning. So I've cancelled my manual position off. So I've only got the 2 positions on it. Target, I'm going to push down just above that high. So just looking for a pullback, basically, to get out. US dollar yen 150 ADR now, so that is coming up into resistance. So really nice level coming up on this US dollar yen look. So this is a previous area where we dropped down, bounced out, dropped through it, tested it, rejected it, pushed through, tested it. That was the FOMC rate announcement, which we came back and retested. So very strong resistance we're coming up to here. So this entire move for the last, what, 1, 2, 3, 4 days, 3 days, that entire move basically ready for some kind of pullback. So yeah, nice resistance coming up on that one. Also getting extended above RSI. I'm already in this one, obviously, so I'll be taking a second entry on this on the next 5-minute reversal alert, which will be there. So initial entry is there. Second entry will be going in at around about 169. ADR on this is 130, so that's over an ADR between entries, which isn't great, but not what I can do about it. If it's not going to reverse, we have to wait. But the Canadian dollar will rally with the US, basically. So we've obviously had all that positive news on the US, so obviously that will be rallying the Canadian dollar as well. We've also had weakness, obviously, on the New Zealand and the Aussie. Both of these a little bit weak today. Weird, all three didn't trigger anything for you? Don't know. Have you tested in the strategy tester, Brian? Have you got auto trading? All the basics, basically. Is auto trading turned on? Have you got a smiley face in the top right-hand corner on everything? Have you made sure that the range criteria are met? Is there enough liquidity? Are you with a broker that allows hedging? Don't know. Put it in the back tester. Best thing to do, any EA you buy, before you even buy the EA, you put it in the back tester. You test it. Make sure it works. If it works in the back tester, it will work live. As long as you've got enough liquidity, obviously, margin. So check in your experts and journal tab as well. Check what messages you've got in the journal and the experts. That might give you a clue as to why it didn't trade. So yeah, check in there. Closed EJ with a 0.71 loss. Recovered from a drawdown of 8% since the December yen squeeze. Where of a bounce zone coming up. That'll do. Is that including your swaps? Because if it's EJ, you're probably getting high swaps on that as well. So taking a 0.71 loss on something isn't the end of the day, end of the world, is it? It's a tiny loss compared to what you've been holding, how long you've been holding it for. So, what's in between ADR and ATR? Ryan, I assume you're joking. We went through that in detail this morning because somebody else asked the same question. If you're not joking, let me know, but I think you probably know. CAD is holding just as strong as the dollar. I was hoping for some CAD weakness to get out of my US dollar CAD. Oh, yes, the US dollar CAD. Euro odd 150 ADR. Ooh, look at this euro go. Actually, that's more along the lines of look at the Australian dollar collapse, isn't it? That's Aussie dollar weakness, not euro strength. Aussie coming down hard. Lots of ADRs going in. I think people are getting ready for the unemployment rate tomorrow. So we've had a quick look through all of these ADR hits today. So obviously anything that's hitting resistance is a good opportunity to get in. CAD Yen, beautiful double top, which we've hit, rejected. We're retesting now, so we could be putting in an uneven M pattern reversal here. If that doesn't happen, we've got this other high coming up at 175 ADR. Euro odd obviously is massively extended at the moment. That's now out the top. So that's broken through the resistance. We're coming up into this propulsion gap here now. But as I said yesterday and keep saying, we're coming out the back of the Christmas trading period. So very, very difficult to tell which way anything's going to go. Breakouts are either going to be breakouts or they're going to be false breakouts. And you're not going to know that until we've actually got the price action in. So a lot of resistance on this one, though, to the upside look. So if this propulsion gap gets filled, you've got a big propulsion target just gone in down there. And we've got resistance, 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 resistance. There's just absolute tons of resistance coming up. This thing's got a breakthrough, which is going to find very difficult. So good looking short on Euro odd. All these yen pairs are good shorts. All of them. In euro yen short with the first entry. You might get the second on that one today as well. Euro New Zealand. It's coming up to resistance at 175 ADR. Pound yen. Still going. Massive yen weakness. The website should now be behaving normally. Oh, something's been wrong with that this morning then. So other news this morning, not really a lot, as you can see, going through. That's the morning, basically. There's nothing else that's happened this morning. We had the CPI figures for Germany, and that was it. So nothing much else there, unless that's a bug and with the website and there hasn't been any news because their website's been broken. I don't know. But so there's all your ADRs. We'll have a look through the RSIs as well. Just check up on the chat. Yes, Brian as well. Check the magic numbers are all unique, obviously. Are you back long and short on all yen pairs? Yeah, I am at the moment. I'm short at the moment. When the interest rate decision changes on the yen, I will go short only on the yen. Once that interest rate change happens, I don't think the yen's going to come back for quite a while. So it depends. You can never tell. So the yen will either just go like that, or it will just start to come down nicely like it went up. So if you look at the US dollar yen and that movement up that we had, it was quite nice and orderly a lot of the time. Yeah, there's a lot of interventions in there, but it was fairly orderly on the way up. You can see how fast it's coming down now. Yeah, the market is much more interested in selling. It always sells faster than it buys. So it's whether or not we're going to get that type of movement or whether we're going to get that type of movement. That's what we don't know. So either way, I'd like to be short only, but we don't know when they're going to do the interest rate change. We also don't know how the market's going to react. They haven't changed interest rates for 7 years. So I haven't ever traded. I have traded, obviously, so I've been trading for 15 years, but not paying attention to interest rates and everything. I've no idea what would happen during a Japanese interest rate move because I've never had one, really, that I've traded through. Aussie dollar CAD ADR. Aussie dollar getting creamed, look. Big drop on that one. So potential pullbacks on all of these in the Asian session tomorrow. Can I check gold? No, don't trade gold. Ryan, I wasn't in this morning's session. About ADR. So yeah, basically, if you want to learn about ADR, watch the ADR reversal indicator video, which is there. But at the end of the day, all ADR is ATR on the daily chart. Euro New Zealand 175 ADR. Big move. So all we're looking at is what is the average true range, the ATR of the daily candlesticks. That's all ADR is. We are taking the average true range of the last 10 candles so that we know roughly how much this instrument moves on a daily basis at the moment. It's never going to be 100% accurate. Obviously, there is no such thing as accuracy in trading. It's just gives us a rough idea of how much movement we should expect. So days like this, where you've just had lots of positive movement on the euro and lots of negative movement on the New Zealand dollar, of course, it's going to go beyond its average daily range because something is moving very strong in one direction and something is moving very strong in the opposite direction. So you've got the perfect storm of the euro strength and New Zealand weakness, which makes this move twice as fast. So when one of these stops, i.e. the euro stops pushing or the New Zealand dollar stops dropping, you will stabilize or pull back. So all we're doing is we're using ADR the average true range of the instrument. So ATR is the average true range of the candlesticks you're looking at, the time frame you're looking at. We're looking at the average range of the instrument rather than the time frame. That's really what the difference is between ADR and ATR. Calculated in pretty much the same way there. In the common tab of your export, does allow change of signal settings do anything? Common tab of the expert. Allow modification of signal settings. I don't know what that is. It's to do with signals. If you provide a signal to the marketplace, I think. Don't know what it is. Mumo, always lucky all my yen swaps were positive. Very good. That was lucky. Mine weren't. How am I finding Darwin? Perfect. Yeah, I mean, I've used Darwin for years. I switched to Darwin after Alpari went bust in 2015. So I've been using Darwin for a long time, Darwin X. This is where my S&P investment account is with Darwin X, which is why I'm using them for the indices, because I know them. The spreads are a little... The spreads aren't bad, but I mean, they're not quite as good as Robo Forex, but execution is faster than Robo Forex, I think. US dollar yen gains more than 1% for the second day. Yeah. ATR includes gaps, ADR doesn't. No. ATR and ADR are the same thing. ADR is just ATR on the daily. My indicator doesn't use gaps. It measures the daily movement. If the gap's up 700%, it's not going to affect ADR at all with my indicator. I don't know about other people's. But that's not true. ATR and ADR, nothing to do with gaps. ATR is just average true range. Watch the video we can post. All explained in the video on the website. This market isn't going anywhere. We're stuck. Let's have a look at the RSIs while we're waiting. Damn, an instrument hit 175 in both directions in one day. Could do. Yeah. We've had this discussion before and you agreed with me. Don't think so. I don't know. I don't know. All it does is draw lines on the chart. When it gets above the lines, it signals an alert to say the thing's moved. Somebody else posted in the Telegram group today about how different brokers have got different ADR levels because their data's different. Yes. Does it make any difference to trading? No. If it gets to ADR on my chart and you take a trade and yours hasn't got to ADR yet, what's the odds of my trade working? 50%. What's the odds of your trade working if yours gets to ADR? 50%. Is yours right or mine right? Nothing's right. It's just all ADR is doing. All ADR is and the RSI are condition indicators. They measure movement. When movement is beyond norms, we go ping, 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 have a look at me. Whether you use ADR, CCI, MACD, stochastics, PDI, Bollinger Bands, whatever you use, doesn't matter. All these instruments, indicators do is measure volatility. When volatility is above norms, we need to be paying attention. That's literally it. Whether it's, you know, this is, I used to do this when I started trading. I was like, I'm not going to take a trade because it hasn't hit the line yet. Oh, it missed the line by 2 pips. I'm not going to trade it. Suddenly you realize it could hit there, or there. All of those things are big extensions. all it is. It's just something that says, hey, look at me. I've gone beyond my normal ranges. What do you want to do with me? Short me? Yes, I do. Why? Because there's resistance here. And you've gone up a long way without pulling back. What are you likely to do? Pull back because there's a propulsion gap. It's just something to go and look at. That's all it is. People get too tied up in the details. Does it include this? Does it include that? Shouldn't it do this? Shouldn't it just measure from yesterday rather than today? I don't care. Which is right? There is no official definition of ADR. I made it up. So it is what it is, isn't it? ATR is the average true range of which broker? If you go and measure an average true range of a broker that starts their market at 7 a.m., like Forex on the DAX, and you use a market like Darwin-X, who starts at 3 a.m. on the DAX, are their ADRs going to be the same? No, they're going to be miles apart. Which is the right one? Neither. They are what they are. They are just a measurement of how that broker and that broker have measured price movement. Nothing's right. Nothing's wrong. It's just different. Everything in trading is just different. There isn't a right or a wrong thing. You press the button and you hope. That's the way it works. In FX, ATR and ADR has little difference. Yeah, they're the same thing. It's the same in stocks and indices. It's exactly the same thing. There is no difference on ADR and ATR in stocks or indices or commodities. This is just a measurement of distance, isn't it? But if you want to take into account gaps, you'd need to adjust an indicator that takes into account gaps. Or not. I don't know. Which is right, using a gap or not using a gap? Because let's think about this for a second with gaps, yeah? If you've got ADR on a stock, where a stock might close there and open there, and then trade up to there, and then it might open there, trade up to there, and then it might gap down to there, from there, and trade down to there. What is the ADR of that stock? It is how much it traded. What is its average daily range when it's trading? I'm not interested in what is its average gap. That's irrelevant information. How far does this thing move on a daily basis? I'm interested in, has today it gone above what it normally does on a daily basis? Gaps have got nothing to do with it. Gaps get filled. That's how you use gaps. So they shouldn't be included. Well, should they or shouldn't they be included in ADR? It's up to you, isn't it? It's individual preference. Which is the right or the wrong way to measure it? Individual preference. Discretion, as we were discussing this morning in intricate detail. It's all discretionary. Everything's discretionary, isn't it? Anyway, enough talk of ADR. The RSIs today, CAD yen, just about extended over the 70, not quite got to the 75. That's close, if it pushes any further, to getting a signal to go short on it. The Swiss yen, also very close to getting a signal to go short. I've already got 3 shorts on yen pairs, or the pound, the US dollar, and the euro. But obviously, because all of these are getting trounced at the moment, all of these potentially could signal to go short. So if you're using exposure rules, obviously just bear in mind you don't want to get into everything. But if you're using low risk and you want to get into everything, do it. Euro yen also extended on the hourly. That one basically was already triggered an entry, as you can see. So I've got into that one this morning on that extension. It's extended again. We've just come up to another resistance. So watch this candlestick to see if we get some limit orders triggering here. We've got another weekly level coming up here as well. So we've got this whole zone here, basically, which we rallied into and sold out of, rallied into, sold out of. We're rallying into it again, very much the same as that. It's going to pull back. So good looking short opportunity on that one as well. The pound yen, not quite ready for a second entry. Pound yen in that one already. First and second entries. So first entry was taken yesterday. We've had the second rally day against the yen. So second entry's gone in there today. Resistance coming up here as a fallback. So third entry will go in at resistance. Average will come up. And obviously, I'll be looking to get out in this propulsion area here, which will be above that resistance, which would be nice. And the US dollar yen, again, rallying up, just about to hit resistance there. So this was a first entry yesterday on that RSI extension. Nice divergence on the RSI. So looking for it to come back down from that high, which is that previous resistance turned support. So looking for a pullback on that leg. If that fails, we'll be looking to push back up into this resistance at the highs up there. Go short from there. So those are your hourlies. Quite a few there. We had the euro pound get extended, which I'm already in long. So we got the extension on that one there yesterday. Watching this level here, which is within ADR, we'll probably get some reaction out of that area there because we've bought from it multiple times and we absolutely slammed through it. So I would expect us to get some resistance there, but the euro should be fairly strong. We've got no pound news coming up tomorrow. We've got construction PMIs, but there's no pound news tomorrow. We've got the CPI flash estimates tomorrow for the euro, which will come out, I suspect, as positive, which will probably rally the euro a little bit more. So I'm hoping to be able to get out of this one tomorrow. The other extensions we've had were the euro US dollar, wasn't it? So that was extended yesterday and on Tuesday. So first entry was there, second entry yesterday on that one there. Went into nice profit this morning. We looked at this one this morning and I said here, shall I get out? Because it's highly likely we're going to get a bounce out the propulsion gap. We did. So I'm looking basically for the market structure to carry on going and put in another leg up into that resistance. So that accumulation there should be basically where we can get to if we're going to push to the upside. If we're not going to push to the upside, obviously it's just going to drop. We'll have to scale in, but that will depend on what happens tomorrow with the unemployment rate. So we'll see what happens with unemployment tomorrow. As we've got today, unemployment claims coming down and the non-farm employment change going up, it's likely we will see that unemployment rate potentially decrease. So we're forecasting at the moment a 3.7 to turn into a 3.8. So I think there's a good chance we might get a 3.7 out of that tomorrow. And it dropped slightly because the unemployment claims are down and the unemployment rate is up. So you would expect the unemployment rate there to be dropping, or unemployment change is up rather. So we'll see what happens with it, but might get a little bit of negative movement on the US tomorrow. So we'll have to see. That will obviously help the euro US tomorrow. So we'll see what happens with that one. But I think we're probably going to wait now until news before we get any more big moves in. So those are your RSIs on the hourly. Euro yen, we just had a tick over into 3 o'clock. So now we've got euro yen extended, pound yen extended, and US dollar yen extended as well. So all of these now massively extended, which is good. Entry opportunities. They're also extended on the 4 hour. CAD yen extended above RSI 70 on the 4. Swiss yen also extended. Euro yen also extended. You can see all of these. The pound odd extended again to the upside. That's a massive rally. There's no real good resistance on this one until we get up sort of into this area here. So although that is extended, I'd like to see that get a little bit further, really, but I think it's probably going to pull back before then. But so that's extended. Obviously, it's everything you see on the hourly basically is getting 4 hour extensions now, mainly yen based. So huge move to the upside, equivalent to sort of that sort of move where we get the pullback, that sort of move, we get the pullback, that sort of move, we get the pullback in the opposite direction. So just waiting for these all to kick in basically. And US dollar yen, huge extension again, coming up to resistance. So good potential bounce at the highs coming up on that one. So good opportunities everywhere at the moment. Okay, market's starting to rally. So S&P might be my savior today. Running the breakout EA, I delete the stop losses, but the system keeps putting them back. Yep, you can't. It doesn't. It uses stops. If you're using the ORB EA, it uses stops. Can't do anything about that. If you turn the EA off, it won't kill your positions. It just won't manage your positions, i.e. it will stop that stop loss behavior. Opening range breakout is a stop loss based strategy, so you can't not have a stop on it, because otherwise you would never, you run the risk of being in a trade forever and it just running against you forever. So there is a set file in Telegram. If you type in Hedge, there's a set file called DAX Hedge set. That one there. See that? But it says DAX Hedge set from September. That is a set file which kind of mimics what the stock index Hedge EA does, but it has to use a stop loss. So what it does is it puts the stop loss miles away, like 5 ADR, 6, 7 ADR, or 10 ADR, I think it is, away. And it adjusts your lot sizing accordingly. So there is a version in there if you didn't want to use stops. But if you don't want to use stops, you want to use the SAHEA, because the ORBEA is not designed to run without them. Euro yen was triggered just because of the RSI. I see no reversal pattern. I'm not in the euro. Oh yeah, euro yen. That was today. I got into that one. So H1 RSI extension, and then we had a reversal alert here. There. Yeah. So where's your high? Where's your low? There. So that's the high. That's the last down candle. So that is where the support rectangle would have been. So that was the reversal there. And RSI was obviously extended on the hourly. But it's obviously rallying further, so. Is there a point to take a position in a number of FX pairs against the yen? If you think we're due a reversal, or should we just halve the pairs which may have a better outcome? Is there a point to take a position in a number of FX pairs against the yen? I don't understand the question. The only point, I mean, that's kind of a bit of a loaded question. Anywhere you want to. Where do you think is a good place? Take one. So you could either use a resistance level, take a trade there, or you could use an RSI extension, take a trade there, or you could use a combination of a previous resistance and RSI extension. There's never a good point, is there? A good point to take a trade is wherever your system says you should take a trade. My system tells me to trade when we've had a relative strength move in one direction beyond normal extremes. Your system might say, I only take trades when we've hit a resistance level and rejected it. You mean overexposing against one currency? Well, that's what the 2 exposure rule is, isn't it? So if you're using normal position trading lot sizing, you only get into 2 positions on one currency at a time. That's what the exposure rule is. If you are using reduced risk, you can get into more positions on the same currency, because if you've halved the risk, you can get into twice as many positions with the same risk, can't you? It's up to you. Good day, Lee the Goat. Thank you, David. First time for the first cut of 2024. Haircut? Yep, it's definitely time for the first haircut of 2024 for me. I haven't had time. I've been ill all over Christmas. well, not over Christmas, between Christmas and New Year, I've been ill. So I haven't actually had a chance to get to hairdressers. If that's what you're talking about. If not, I don't know. You're talking about trading? I don't know what you mean. Still no luck with the SAH? I don't know, Brian. Check the logs is all I can suggest. Don't know. It will say in the... It should say in the logs. As long as auto trading is turned on. The only two things you need. Auto trading needs to be turned on. You need to have the smiley face there. If you've put the EA on the charts with auto trading turned off, when you turn auto trading on, it does not turn the EA on. You need to click that button, allow live trading. You need to come into the common tab and literally physically tick that to get the smiley face. If you're an MT4, that is. If you're an MT5, it doesn't matter. Other than that, if it's not taking trades, it will be because either you do not have 10 days worth of data, therefore it cannot calculate ADR. If it cannot calculate ADR, it cannot calculate anything, and therefore it cannot work. Or it hasn't taken any trades because the range sizes are beyond the extremes or below the extremes that you've set in the EA. Other than that, I don't have an answer for that one. I don't know. Expert tab and journal tab will always give you information as to why something hasn't worked, if there is a reason. So check those and see if there's any information in there that helps, is all I can sort of suggest. And make sure your times are set up correctly, obviously, for your broker. So check your broker. Times are correct for trading. So my broker is 16:30 is the New York Open on my broker. If you set it to 16:30, but your broker doesn't open New York until 17:30, obviously it's not going to trade. So you need to check the times are correct, the opening times are correct, which 90% of brokers are the same, but they're not all the same. S&P just about to hit TP1. In fact, I'm going to hit TP1 manually just in case it pulls back. We're just coming up to the pre-market highs. So I'm just taking profit on the first position at pre-market high because we could well find some resistance there. We've just put a large propulsion move in, so could be looking for that type of movement. So I'm just going to get out the first position and bank that. US dollar yen just got a reversal on 5 minute. Yeah, there you go. So there's entry gone in. US dollar yen short. So that's my second short on the US dollar yen. Reversal alert triggered at 150 ADR. Average now there. So I need to adjust my targets on this. So TP was down here at the gap propulsion. Basically the open of the year. So obviously now I'm not going to be targeting all the way back down there. Although if the yen powers up, it will obviously get down there. And if the US has a negative run tomorrow, it will probably get down to there. But that's 250 ADR away from where we are. So a nice easy exit on this would be back at entry 1. There. So basically looking for a bounce off of this resistance and undo 50% of that move. Coming back down into this resistance, which we've already tested twice. So looking for a pullback down to there now. David, on your H1M5 on different, is your H1M5 on a different account now? Yes. So I've split my capital down because I'm not trading prop now. So I'm putting more capital into the SIH strategy. And I'm starting a new strategy, a hedging strategy, which is in final backtesting at the moment. which is looking pretty good. You can't see because it's behind my head, but nice return on drawdown, 1.5 profit factor ish, something like that. So that's in testing at the moment, which I will be putting money into as well. So I've reduced my position trading account size down to put more into the stock index hedge strategy because that's worked very, very well. So I'm just diversifying basically. So a little bit less capital in here and a little bit more capital on the scalping side. But I should still be able to pull, I'm hoping to pull about 4 to 5k out of position trading a month. Possibly more, probably more. And similar-ish amounts out of stock index hedge. So looking to make, I'm never looking to make more than 10 to 15% on any strategy. But I can run multiple strategies with different revenues, obviously different accounts. That obviously exponentially grows everything, doesn't it? So are we still on H1 25.75, 14 RSI? 21 RSI, not 14. This is the 21 on the hourly, 14 on the 4 hour. 4 hour is the 14 RSI, hourly is the 21. Last time I checked, the risk was 0.25% per entry. If you're using exposure rules, yes. If you're not using exposure rules, then it's lower. I'm using 0.1 instead of 0.25 because I'm trading every pair. Swiss yen 125 ADR. Poor old yen. Mental movement. Crazy 2-day rally. This will all come crashing down tomorrow. In the market reversal alert CA, I set a fixed lot size of 0.2, yet it's sold US dollar yen with 0.01. Did you actually change the input to use fixed lots? So you're going to need to change the input from percent to fixed. Then that will use whatever you put in there. Yeah, so you've got to actually change that. So you specify what lot sizing type you want to use. Other than that, no. As long as you've got unique magic numbers on everything, it should all work fine. Covered gold? No, haven't covered gold. There's your gold. That's about as gold as you're going to get out of me this year. I'm not even looking at it. Afternoon, Rajiv. Just have one account for the mortgage. Yep. That'd be nice. No, doesn't work that way. Basically, you've got to keep all your strategies segregated. We discussed this. We're discussing all the same stuff as I said this morning. I feel like I'm having a deja vu conversation. I feel like I'm being set up. Everybody in here was here this morning and they're just repeating the same questions just to annoy me. But yeah, always have a separate account for every strategy that you trade. You could have one account for your mortgage and one account for holidays and one account for spending money. You'd look at it that way. There's many ways to crack a walnut, usually with a large sledgehammer, but all goes into the same pot at the end of the day. Using the EA for prop, do we leave on the smallest lot size and let the EA do the work and manage the trades? Market reversal alerts EA for prop. I don't know. You will struggle on prop because of the 5% daily drawdown. So you've got, look at what I'm in here, yeah? So I'm using 0.1% risk per trade. I'm in 0.71 drawdown across 5 positions at the moment, 3 days in. So I am running almost at 20% of your daily drawdown limit using 0.1% risk. Whipping Post, you're just doing this to annoy me now, aren't you? I'll play along. But this time I'm going to give you a gold coin. I'm still not looking at gold. Yeah, just, I don't know. Props very difficult with position trading because you're not in control of risk, of drawdown. You can control your risk, but you can't control your drawdown. The market controls your drawdown. So I would go with as low as possible. But the thing you've got to think about, let's say, for example, you are trading a 100K prop account. Yeah. What you are actually trading is a 5K account. Yeah. And they are asking you to double that account to pass the evaluation. So you have got to use high enough risk that you can double the account that you've got to trade with, 5%, without going over that 5%, without blowing it. So you can draw down by 5K. It's very, very hard to stay within 5K unless you either limit the number of pairs that you're trading or reduce your risk down, or ideally both. But you're never going to know what pair is going to go into drawdown. So again, luck always comes into it, doesn't it? If you are taking euro yen and euro yen for the entire 2 months that you're in that evaluation, just does that, hits RSI, hits RSI, hits RSI, hits RSI, your quid's in. You're going to look at it and you're going to wish you'd trebled your lot size. If euro yen decides to do that for 2 weeks, that account's blown. Regardless of what lot size you started with, the drawdown will be achieved. However, if it hits 5% of drawdown and they close your account, I can guarantee you within 48 hours, the market will have done that. And this is what prop does. Prop makes sure that you cannot trade profitably because it knows the market is not going to let your strategy play out. It will eventually, but not within a period of time that you start it. So I have passed prop with the market reverse alerts EA, but I can't say it was anything but a good lucky run with the instruments that traded at that time. It's the same as me having months. So I have some months where I sit here and I never go above 5% drawdown. I have other months where I'm sitting on 15% drawdown. All of those months will be profitable, but one is 5, one is 15, one is a pass, one is a fail. All profitable, but the market decides how much of drawdown of my account is used, not me, doesn't it, by its squeezes. So I don't have an answer for that one. I think you are better off using either a stop loss or a hedge-based strategy on prop because you need high risk. You need to be going in with 0.5% a trade, 0.25% a trade plus, like the stock index hedge. You need to have the ability to bring 0.5% to 1% a day to the table, don't you? Which with position trading, you can do, no problem. Yeah. But you're going to do it by utilizing your account. With hedging and stop losses, you are going to be able to control that daily drawdown and you can stop if you get close to that daily drawdown. That's the difference. So I don't know. Everything's a flip of a coin at the end of the day, isn't it? So could you explain why it was a reversal pattern when you took the last position on the US dollar yen? because it gave me a reversal alert. If you want to know why that's there, go and watch the video about the indicator on this page. Notes. Oh my God, oh, come on. Wow, that's slow today. Blimey, that took a while. So that video there, what the market reversal alert indicator and dashboard does, that explains the logic behind the indicator and what it does. So basically, it's just a market reversal. Yeah, so the last batch, in a nutshell, the last batch of sellers that tried to drive the market short failed, and the buyers pushed up and made a new high. Then the sellers took control and managed to get past the level they initially tried to sell at, which is basically a break in structure to the downside. Think M pattern and W pattern reversal. Double bottom, double top. That signals when those occur, basically. Which is telling me that I should be getting in short because the sellers are in control. I'm already short, so I'm adding to my short position because the sellers have re-entered the market. You should change your lower screen orange ticker to display the most common answers to all the questions you're getting. Do you know what, Stephen? I actually went one better than that. I created a handbook which goes through step by step what you should watch, what you should read, in what order, how long it will all take you to know everything I know about trading. And it's about 25 hours worth. So unless you can get a ticker that you can read 25 hours worth of content within a live room session, I don't think that's a good solution. It's too much information. David, I have the indicators to position trade, but my thing is I have only 10K in my trading account. Saving up more, but I'm just not sure 10K is enough. Yeah. Again, I'm not going to lie. If you want to make 10% a month on your account, which is achievable, very achievable, you can do that. Anyone can do that. Yeah. This is why we concentrate on this column. Yeah. We forget that. Yeah. We're concentrating on percentage gain on our account. If you concentrate on percentage gain on your account, you will achieve percentage gain on your account. If you say, I need to make 1/4 to 0.5% a day, every time you see something get to 1/4 of 0.5%, you shut it and you put it down there, you'll make money. Yeah. But you will make 10 to 15% on average a month, every month. That is it. If you want to try and achieve more than that, you are over leveraging and you will blow your account. So if you want to make and need to make $3,000 a month to pay your mortgage and your bills, you need a $30,000 account. Or you can go with a $15,000 account, double your lot size and pray that the first month works. If it doesn't, you're dead. I wouldn't recommend doing that. So you've got to have money. This is a business. If you want to do this as a business, do it as a job, you need capital. Yeah, you can't go and start a shop up on the high street with no money. You need capital. You can't go and start a business online selling something. You need stock. You need capital. You can't start any business without capital. If you want this to be your business, you need capital. And you need a lot of it. You can trade with 10K, but don't expect to get more than $1,000 a month out of it, which for a lot of people is a decent amount of money. Or for the first year, you just accept the fact you're not going to make it, but in year 2, you're going to have 20K. Do what I did. I started off with a much smaller account, and I went up to a very big account, and then I came back down again because it was too scary. But I started off with a small account, and it turned into a bigger account. There was a point on that equity curve where I went, this is working. And at that point, I doubled my account and made my equity curve move faster. Yeah, because I had the confidence that I'd cracked it. So if you start off with 10K and after month 4, you're sitting on 14K and you have the confidence that you've cracked this, try and find some more capital and make it faster. But you've got to have capital. We talk about it all the time in here, don't we? About the Lamborghini crowd, the guys that are selling you the trading courses with their Lamborghini in the background, their private jets. None of that has come from trading. It's either come from a rental agency, their parents, or the education course they are selling you, not from trading. Yeah. If they were trading with their own capital, they wouldn't be selling you a course. Simple as that. You've got to have capital. You can't do it without. Or you go prop. If you go prop, yes, you can get capital. You can get 100 grand, 50 grand, whatever you want. But they will turn around and say, you got that much risk. And I have never found a strategy ever, and I've never met a trader ever that has stayed within 10% drawdown on their account. There is no strategy on the planet that has an equity curve like that. Equity curves go like that. Every single one of these is you blowing a prop account. They know that. I know that. You probably in your heart know that. But that is 2 months of, oh, weren't we lucky? Oh, now we're not. Back to square one. How much did you get? Nothing, because I blew it. Oh, back to square one. Back to square one. That's what happens. Because this thing is not going to stay in 5 or 10%. It's going to stay what it's going to stay in based on what the market does. If you've got a strategy with a 75% strike rate in the backtester over 5 years, on day one, you can have a losing run of 10 trades. Yeah, that strategy could recover the next 20, but when that 10 hits you and you're minus 10% on your account, you will lose faith in that strategy and you will system hop to the next one. They know that. So what do? You buy another proper valuation, but this time you use a different EA, a different strategy. That one works, gets you past phase 1, then you try phase 2 and it blows it because it has a bad run. Well, it works most of the time. Let's try it again. Nope, definitely doesn't work. Next strategy. Never-ending cycle. Never get out of it. If you had an account where you could draw down into all of it, you would understand the market goes like that. That's what your capital's there for. Think business. Always think business. Yeah. You've got 50K to invest in this business. My business is opening a shop. I'm going to take 20K of that out. I'm going to use it on stock. I'm going to take 10K of that out to refit and rent my shop. I'm going to take 5K of that out for someone to manage the shop part-time. So I've now got 15K left in my bank account. What's that? Working capital. Yeah. What's that? Drawdown. Is your business going to succeed? If you do it right, yes, it will. But you've got to get that drawdown back. All your account is capital. It's drawdown. The whole thing. But for some reason, you're told that you can't risk more than half of it. And if you lose 10% of it, you need to stop. Why? It's part of business, part of normal business. And that's not right, Brian. Oh, AI. What did you type in to get that one? John Wick with his hand on his head. What? That's not right at all. Look at his fingers as well. Even his fingers are wrong. He's got a finger on a finger. Little finger, 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 thumb. He's got 6 fingers. 1, 2, 3, 4, 5, 6. He's got 6 fingers. He's got a thumb. I can't see that one, but there's definitely 5 fingers there. Let me just count them. There's definitely 4. AI is terrible. And we've got people like Greg Secker now selling us AI trading systems. Do not trust AI. It can't even get a hand right. Someone standing behind? It might be someone standing behind John. But if you have to ask the question, if someone's standing behind John and their hand is there, what are they doing to John? And why are they wearing exactly the same clothes as John? Not right, is it? We're trusting this thing to do an awful lot for us. It's driving our cars, for God's sake. I hope it doesn't think it's got 4 pedals to push. It'd be in all sorts of trouble, wouldn't you? Still running on the S&P. We are only 2R at the moment. We've managed to get, we're 3R on the Dow. We're getting close, actually, close-ish to potentially getting out and trying a reversal on the Dow. NASDAQ's miles away. S&P's obviously clean break today, so we haven't got to worry about that one. So ideal scenario today, S&P rallies up to there. Dow hits that propulsion gap and gets pushed away, and we close that hedge out. So that will be a profit. That will be a lovely profit. That will pay for the hedge. And then I've got obviously all the morning's banked money to fall back on. So I don't think people actually realize how much thought goes into structuring a manual. Yeah. I said in here the other day, the boot camp is 12 hours. It took me 3 weeks to put that together, to record 12 hours worth of video. There's an awful lot of information, especially, I mean, even the manuals I put together for my products. You know, the manual, I don't even know where the manual is. It's that one, isn't it? I mean, even putting this thing together. But we don't read manuals, do we? The only time we read a manual is when we've got a problem, and then we come back and look at the manual and realize if we'd read manual in the first place, we wouldn't have a problem. But that's not the way it works, is it? Especially men. We fix things, we hit them with hammers, and then we go, why is that not working? Oh, because it needs a screwdriver. Do you advise to have different accounts for SIH and market reversal? We definitely. Always keep your strategy segregated. Otherwise, you're never going to know what's working and what's not. If you run 3 strategies in the same account and come out at the end of the month and go, hoo-hoo, I made 12%. How did you do it? Yeah, if you made 25% with one strategy and lost 12% with another strategy, you need to know that that 12% was lost. Why was it lost? Do you want to trade that strategy anymore? Is it working? Yeah, you've got to have everything segregated. Otherwise, you're never going to know what's working. I'm even segregating my SIH strategy down into UK and US because I want to see what the performance is on those. I can do it in one account, but I want to see what the performance is separately. So if I've had a good morning, like I'm sitting here right now and looking at these hedges going, I don't care. I banked $500 this morning. I've got $150 sitting there. That pays for that hedge. So at the moment, I'm $138 down on a 500 banked morning. So I'm $350 up right now, whatever happens today. But in this account at the moment, I'm in drawdown. Yeah, so you segregate. If you look at strategies in detail, you'll also find instruments that don't work, which is why I'm not trading oil and I'm not trading gold, because I know I'm not good at them. They don't work. I just can't crack those. So I don't trade them. These I do. So you segregate everything. Analyze everything. If you have a strategy which is running and you run it for 2 years and you make a return, and every single year that strategy made a loss on the US dollar yen, what do you think you should do the next year? Remove that from your portfolio, because all the loss made there will increase your profit the following year. The only way you're going to know that is if you analyze your performance and analyze the instruments you trade with the strategy. And the only way you can do that is by trading a strategy consistently over a period of time, not system hop. You've got to keep the same strategy running. That extra hand isn't his. I want to know where the other hand is then. That is somebody standing behind him. It's Jerome. Yeah, it might well be Jerome. Powell. Yeah. I know exactly what happened. It was after FOMC. That picture is the aftermath of that picture. Same shirt, same suit. Could well be Jerome Powell standing behind him. Yeah, John's not happy about it. Are you in the Telegram group? I'd like to post something related to your question. Cool. If your hedge position hits, let's say, 5 TP and closes the trade, but the hedge is still active against you in the other direction, do you take the hit? Yes. So with this DOW, for example, what's going to happen is if it gets here, we close out the longs and we are still short. I'm using aggressive exit strategy. So basically what happens is I will then trail a pending order underneath price. And as soon as we get a reversal in the market, my pending order will trigger and I will use the loss recovery target to try and exit that trade. If it carries on going, it's a loss. Nothing you can do about it. This is why when we get hedged, the TPs jump up to the 5R level, because we need to give ourselves time to look at where we think price is going to go. If it never gets there, it's a loss. Yeah. You're not going to win every day. You can't win all the time. Again, there is no holy grail that you win all the time. So you will take losses. It's just minimizing those losses. So have you tried the Open BB terminal? No, what's that? Never heard of it. Financial terminal that is free and fully open source. You'd have to pay for data, wouldn't you? Where would you get your data from? Who's going to provide the data? I mean, it's not for me. I don't need an open, it's AI-powered stuff as well. I don't need another piece of software, because this does everything I need it to, and everything I've built is in this terminal. So it would mean me starting again from scratch. So not for me. Everything I do is automated through MetaTrader. So there's lots of other software out there. If you want to use other software, there's tons of it. Tons of it. It's all down to the data at the end of the day. You're going to get data from your broker, usually, or you will get it from some other source. But there is no centralized exchange for Forex. So you're reliant on a broker or someone to feed you data. So if you're trading futures, it's not a problem, because you get all the data from CME or any of the main exchange data sources. There is only those places you can get them from. So, but yeah, there's lots of other software like TC2000. TC2000 is an incredible bit of kit for stock and index trading. There's loads of software out there that's good, but choose what you like. And at the end of the day, as long as it's got some automation you can put into it, if you've got a system or software that doesn't allow automation, you're just causing yourself a headache, which is why I use MT4, because it's easy to automate. NinjaTrader is great as well. Yeah, NinjaTrader is very good. It's not great for coding for it though. But yeah, nothing wrong with Ninja, but that's for futures, not for Forex. That picture makes me think of the medical room scene in The Moving Fletch with Chevy Chase. It does look a bit medical, doesn't it? All good fun. Right. That pending order to try and recover a trade, if possible, where the hedge is running against you, is that manual entry or do you automate it? It's all automated with the stock index hedge strategy. So it's this setting here, hedge recovery. Yeah. So I'm using the conservative hedge exit with aggressive hedge exit on profit close. So basically what this aggressive does is when price reaches your target, it closes out the longs and then it places a pending order automatically underneath the candle close. So if price then makes a new low, you get into a second exit and you try and get out on a quick pullback. If price pushes against you further, the pending order is cancelled and trails and cancels and trails until the sellers enter the market. When the sellers enter the market, it triggers your pending and you get out. That's what the aggressive exit is. It's all automated. Just trying to think if we've had one this week. No, that was a clean break. There we go. There's one. Yesterday. So shorts exited there. So there's the hedge. Shorts exited. Yeah. Pending order there, which is above the high of that candle. That pending triggered long. We pushed up and exited there. That was about a $50 win. So the lost recovery target was, I think, $55, and it closed out at 54 something. So that's where the exit was. You would have got out on any of this half an hour of price action, and if that didn't work, you would have got out on that anyway. But yeah, so it's all automated, and the EA automatically closes all this out for you. You can't actually see it very clearly because the entry and the exit was on the same candle, but put it in the strategy tester and test it and you'll see it playing out. I'm just trying to see if I've got. Just trying to see if there's any good examples. There's one. So there's your hedge. There's your short exit, which was off of 5R. And then it entered a pending order there above that candle high. That triggered, and then it closed out those longs and those longs there. So the total there is less than, well, it's 3,000 in this case, but it's less than your loss, basically. So what we're doing is we're taking a profit of X, and as soon as it's pulled back and the drawdown is lower than the profit, we close the whole position out in a profit. Hedge recovery, loss recovery. If you exit aggressively and it moves the opposite direction and we re-hedge, then price moves the direction of the exit, the EA will get you out at percentage exit. If you re-hedge, the EA won't manage it. The EA will get you out because if you take a manual re-hedge, it won't, as you just said, it won't know your manual hedge. This is what magic numbers are for. It knows what trades it's taken and it only manages its trades. Yeah. So it won't manage your rehedge, no, because it's nothing to do with it. The aggressive entry on the hedge, have a stop loss, no. Put it in the back test. Go if you haven't got the stock index hedge EA and you want to test stuff, just go and download the demo from the MQL5 marketplace and run it in the strategy tester. You will see how it works. It's all explained in the video anyway. So if you go onto the page on the site, the video explains in detail how everything works. It's an hour and 20 long. I never shut up, as you know. So it's an hour and 20 long. But it explains everything, how the whole thing works. So, but if you want, I would always say to everybody, somebody bought one of my EAs the other day and then emailed me and says, I don't understand what this does. And I was like, it's one of those moments where you just go, why did you buy it? This is just how I operate. I would never buy anything or use anything that I have not thoroughly tested to see and understand, first of all, how it works, whether it suits me, and whether it's profitable and it operates properly. You've got to understand what you're putting onto your charts. If you don't know what something does, you shouldn't be using it. It's money. Yeah. It's like saying, right, I tell you what I'm going to do. I'm going to bet on that horse. It's a donkey, right? Use your eyes. Go through it. Has it ever won a race? No. Then why would you even consider it? If you put an EA on your strategy tester and it just goes, blah, 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 it makes a massive loss, you're not going to use it. If you understand why it makes a loss, because I didn't set that to that, because that is going to stop that loss happening and turn it around, and you do that and then the P&L goes up, use the product. But never use anything that you don't fully understand, which is why everything comes with a demo, comes with an hour to 2 hour video and a whacking great manual, plus a load of strategy documentation. Because you need to understand what I do and why I do it, not just watch me do it. You've got to understand why I'm doing what I'm doing. Why am I adjusting my targets to the levels I've adjusted them to? Yeah. And I explain every day, I'm going to move the TP down here because I think we're probably going to hit a double top. There's likely we're going to get that happen. If I have my TP there and that happens, I can't get out because it hasn't hit my TP. So I'm moving it down because I think we're probably going to hit a level. Yeah. I explain every day, not what I'm doing, why. You've got to understand the why. It's the most important thing in trading. If you don't understand why you're doing something, you shouldn't be doing it. Why am I getting in my car and driving through this torrential rainstorm? Because there's an emergency I need to get to. If there's a torrential rainstorm and there's not an emergency, I'm going to sit indoors and watch telly. You've got to understand why, the why behind everything. Otherwise, you shouldn't be doing it. It's, there's all these EAs that will pass your prop verb, guaranteed, excellent. Stick it on my account. What's it doing? I don't know. It says it will pass a prop evaluation. You're mental. Somebody said in here, was it this morning? We were talking about signal services. We had a new signal service spam this morning. I can't remember the name of them, but new signal service came in and spammed the comments, which I deleted. And then somebody said they had used a signal service in the past. Guarantees no more than 10% drawdown on the account. So they signed up for the signal service. What did it do? Immediately going to 80% drawdown. Yeah, it's just like, why did it go into 80% drawdown? No idea, because it's a signal service. You've no idea why the buy and the sell button is being pressed. If you don't know why the buy and the sell button is being pressed, don't press the buy and the sell button. Yeah, there's got to be a reason. There's got to be logic. There's got to be something that's going to happen that you're expecting. Otherwise, you shouldn't be pressing a button. You shouldn't be placing something on your chart that's going to press a button for you either. Yeah? Got to understand how everything works. And it's, I keep saying to anybody who's asked me questions like, have you tested it in the strategy tester? I'm not saying it because I'm lazy and I can't be asked to answer your question. I'm encouraging people to do it themselves. Have you put it in the strategy tester? Have you seen what it does? No. Put it in there and they go, oh, I see. Yeah. It's much easier to learn it yourself and understand it yourself because then you know what's going on. Something doesn't work. You can figure it out if you know what it's meant to do. If you don't know what it's meant to do, how are you going to figure out how it's broken? You can't. Important. One of the most important things in here is this thing, strategy tester. That's the wrong account. I was going to say, why is that not running a test? It should be running a test. That panicked me then because I should be running. It's finished. Sorry, let me just copy this out. Euro US dollar. Yeah, so got to use this thing. It's absolutely critical. You understand how things work. Watch them. Remember what we were talking about this morning? If you were here this morning, you've got to put in 10,000 hours of chart time to understand this. If you haven't got 10,000 hours of your life to put aside, put the strategy tester on the hourly candlesticks and sit there and watch years go past in days. That's all time you're watching charts. It's all getting burnt into those retinas. This thing is the best thing since sliced bread for watching what happens with price and watching how things unfold. Euro US dollar, that was, wasn't it? Just need to set the next test running. CJ. All looking good. See, this is all running on full automation, and it's producing lovely profit. Not that I would use it on full automation, but gives you confidence when you run something and it's fully automated, making money without you even looking at the thing. If you look at the thing, you're going to make even more. So yeah, it's looking good across all instruments. Profit coming out of its backside. Nice. CJ. FNet, because it is so bad, I disclosed the name of the signal provider. Oh, right, man, it was yourself, was it? Yeah, Manual Trading 777. Everyone can see what he did. It's on Signal Start. I've got examples of signal services blowing accounts as long as my arm over the last decade. There was one signal service which was very well respected on the MQL5 marketplace. He'd been going for 8 months, 10 months or so. Brilliant results. Blew the account on the yen squeeze. Yeah, blew it. And it was like, that was 8 to 10 months of, and there was a lot of money. There was over 100K riding on that signal of people's money. And he blew his account because it's a human being. And he's having a lucky run. What he's probably done is built himself an EA, he's back tested it, and he's curve fitted it, and he's luckily got a very similar market condition to what his testing was. And then all of a sudden the market regime switches and that strategy no longer works and it just hemorrhages cash. You see it all the time. You see backtest P&Ls go like that. Because that was a trend, that was a range. It's a trend strategy. Doesn't work in a range. Got to be aware of market regime. Every strategy has to be tested over multiple regimes. Otherwise, it's not robust. It doesn't work. I think that's what happens with a lot of these signal services. They learn something. They do something for a couple of months. They make money. They set up a signal service. They have a couple of lucky months. And then all of a sudden, and they don't know why. A lot of the time because they're using someone else's product and they've got no idea. Apparently, somebody's running 100... I can't remember what somebody said. Is it 100K or a $10 million fund with my market reversal alert CA? Do those people know that? Be very wary of running 10 million on the EA without supervision. Is the person running it? Does he know what he's doing? Scary, isn't it? Wish the speed in the strategy tester didn't go from 31 starting speed to 32 last notch. Yeah, that is the only problem with it. It is annoying. It's the only downside to the strategy tester. In MT4, there's only 2 speeds. I don't even know. This is probably not even set up properly, but there's that speed, and then 1 notch higher. That's it. It literally goes from slow little bit faster, lightning speed. I've no idea why. It's just broken, isn't it? It just doesn't work. But that's what I say. If you stick it in and just put it on full speed and watch this thing go up and down, worst case scenario, you're burning price action into your retinas. Yeah. And we did this experiment. We did it in the live room this morning. I said, and I drew loads of lines on the chart with my pen and said, it's going to move up to there and then it's going to bounce. And it did. And then I said, well, if it does break above that level, it's going to move up to that level and it's going to bounce. And it did. Because I've watched it in here doing the same thing, bouncing all the time, bouncing all the time, bouncing all the time. It's all it does. Bounces from support and resistance, support and resistance. All price does all the time. It's going to hit this level and it's going to bounce. All it does. So all you've got to do is find the support and resistance zones and take trades at them. And if it breaks through that one, you find the next one. And if it breaks through that one, you find the next one. It will bounce at one of them. It's going to bounce there. And it's bounced there again. That line there. Bounce. Break through. Or bounce. Make your mind up. Buyers and sellers having a battle. One of them's going to win. Sellers. So now we've got a resistance there, which it bounced at. See, it just does the same thing over and over again. That's what I keep saying. All price does. So when you're looking at where's price going to go, where did it bounce? But watch it unfold in the strategy tester. Where am I looking to exit Dow longs? About 37,713. If it gets there. Basically, it's that propulsion gap on the hourly. There's no real, there's not really, at the moment we're rejecting this level here. But it's old, it's already been invalidated multiple times, so it's not, I mean, it is a good, strong level in the past, but if we push up today, it's either going to rally to ADR, and then we've got to watch those levels there, or it's going to get rejected at that propulsion move from yesterday. So they sold heavily from there yesterday. When we get back to there, we're going to meet some resistance. So I'm hoping that we'll meet that resistance big enough to get out. If it gets there. If it doesn't get there, it doesn't get there. It's just a locked-in loss. But it might take a while. We might just flip-flop around up here. See, it's bullish at the moment, though, so we'll see if we can get more momentum out of it. Do you know if the Forex Tester 5 will let you put the MRA EA on there? I have no idea. If Forex Tester 5 is an EA, no, because you can't run an EA in an EA, can you? I don't know much about it. I've never used it. But why not just put the Market Reverse Alerts EA in the strategy tester? If you're going to use the Market Reverse Alerts EA, yeah, instead of using every tick, use control points. Control points are 90% as accurate as every tick, but I think it was 9 times faster. I did post about it. I think it was 9 times faster and 90% as accurate as using every tick. So use control points instead of every tick, and you'll get the strategy tester moving 10 times quicker. Tested a pass prop for you, dude, on FTMO trial. He blew the trial account in 48 hours. That's the day I decided to learn the craft for myself and make or lose your own money. Yeah. All these guys that are saying they guarantee a pass, read the small print. They do guarantee a pass. They don't guarantee a pass first time. it's all a massive. I don't know who these people are, but they're all most of them are selling you an EA. Basically, there was one guy approached me and he said, "I want to go into business with you," and I was like, "Right, whatever." Blah blah blah. Loads of people contact me and say, "I've got a business proposition." Most of them are brokers and want me to affiliate with them so that you just get signed up with a brokerage. But this guy wanted me to promote an EA that will allow them to pass prop. So I said to him, "Well, give me the EA and I'll have a look at the EA for you." He went, No. The EA is $1,000. There's no way I'm giving you a copy of it. And I was like, sorry, $1,000. The evaluation only cost me $500 for a 100K account. You're charging me twice the evaluation fee for an EA that sometimes will pass and sometimes will fail. So basically, I'm paying you $1,000 for something that gives me a 50-50 shot of getting past the evaluation stage 1. And then it's got to do the same on stage 2. What do I do when I get the funded account? Well, you won't be able to use the EA because it's too aggressive. Right, so I don't know how to trade. You're selling me something for $1,000, which is going to give me 100K of capital that I do not know what to do with. Good business model, mate. Yeah, I'll push that. They're all con men, a lot of them. Just a load of them. They're just out. All they want is your money. When you get it, somebody came to me and again, they said, I've got a prop account. What product would you recommend I trade with on my prop account? Answer is always the same. I get this question at least 2 to 3 times a month. What should I use on my prop account? Whatever strategy you passed with, I didn't pass it. That's like saying, I'm flying at 30,000 feet in this plane. Could you tell me how to land it? Well, land it the same way as you landed it last time. I've never landed a plane before. You're screwed then, mate, aren't you? People expect to do with a 100 grand trading account when they don't know how to trade. Just beggars belief. Just exited NASDAQ's long. Well done, Brian. You obviously didn't get hedged. This thing today, this week has been the week of micro hedges. Look how far I'm hedged there. That literally went beyond my pending order by half a pip and hedged me short. If that hadn't have spiked down that tiny little half pip, I'd be at 2R profit. What can you do? Some days the market just doesn't want to give it to you. But we'll see. So we are still rallying at the moment. So hopefully we'll get another leg up to get out. Again, resistance bounce, propulsion bounce. That one's just TP. See what happens. But other than that, nothing we can do with those today. Position trading is the simplest way to trade. I feel lucky knowing about it. Yeah, it's good. Simple is best. Always, always simple is best. Someone doesn't want to take the time to learn it properly, they can F off. Exactly. That's what I like to say. I'm very wall up with everybody, which you probably see in here all the time, and you'll probably get in Telegram. People send me messages and I answer with very short, quick answers. Not because I can't be bothered, but if I answer you with a paragraph, I'm doing your job for you. There's this thing called Google, and every single one of my products has got a whacking great manual and a video accompanying it. If you can't be asked to read it, I can't be asked to help you. If you come to me and said, I've watched the bootcamp, I've watched the EA video, I've read the manual, I just can't find what this setting does, I will give you the answer. Because you've put the time in, and everybody's going to miss something. You're not going to get everything on the first run. But people that come to me and say, I've just bought your EA, what's the best time frame? Off you go. I know you're a customer. Thanks very much for your custom. But seriously, if you don't know what time frame to put this on, why did you buy it? If I told you to jump off a cliff, would you? That's my mum's old saying. Press the buy button. Why? Just press it. Why? Okay. I've just lost 10 grand. If I told you to jump off a cliff, would you do that as well? My mum used to say it to me all the time. It's so annoying. Because you know the answer's no, but anyway. Please don't go and jump off a cliff. And please don't press the buy button on anything. Not to sound condescending, but think of the logic. If they guarantee a pass and succeed, then what? If you need someone to pass an evaluation, you're not going to hold a funded account. It's just a money grab. Yeah, it is. That's the bit I don't get. It's like the flying the plane analogy or the brain surgeon analogy. You're standing there with a scalpel. You've just cut someone's head open. You've got a brain in front of you. You've got to remove a tumor. You go, okay, what do I do next? You shouldn't have cut the brain open. Yeah. If you've got 100 grand's worth of funds in front of you, you've never looked at a chart before, how on earth are you expecting to make money? I just don't get the logic for people. I don't understand how they think you can produce money because you've got 100 grand there. How they think they can produce money from it. If they can't trade, how is it beneficial to get someone else to trade for you to pass an evaluation and pass you the thing that you can't do? It just defies my logic. I just don't get it. But people do it all the time. And my answer is always the same. I can't help you. Yeah. Got 5 years of your life spare? Right? Come back in 5 years when you've been trading and then you'll figure it out yourself because that's all you can really do. US dollar CAD is sitting at my break even. Looks heavy. Doesn't look heavy to me. Looks like that propulsion gap has held up. That's bounced off of yesterday's low or yesterday's open out of that propulsion move, which they bought from. They've bought from it again. Haven't gone anywhere for the last 3 hours. That worries me. That worries me. But if you look at it on the bigger picture, that will be worrying everybody that's short at the moment. It's a difficult decision. You're in between a rock and a hard place at the moment. Just imagine if that breaks that high, you're easily going to get an ADR out of it. If it doesn't break that high, it's going to retrace. So your decision is, do I jump ship and go, that was awful, I haven't lost any money, or do you hold on with the big balls? Discretion. I can't answer that one. The new Hedge EA is sounding cool. It's sounding cool. If you've been in here for any period of time, you know I've had a lot of cool strategies that haven't actually worked. So, but this one is very much position trading aligned, so it will work. I just need to iron out the specifics. True. Plus, if the prop pass services were any good, they'd be millions funded and not bothering to sell the services. Exactly. This is always my argument to everybody that sells courses. Why are you selling a course? Well, because I make a load of money out of it. Why aren't you trading? Because I make more money selling a course than I trade. Should you really be educating people if you can't do it? Well, no. Those that can't teach. Those that can do. Those that can do well teach as well as do. It's true, isn't it? So many courses out there for $300. They're just videos. You're literally buying videos. Just videos of stuff. It's all on YouTube. Do it. Use it. It's out there. Only reason I'm holding it is because I don't have many other positions and it's pretty much my only risk. But all I would say, AZ, is that is your only risk at the moment, but that is 8%. Yeah. So why not maybe reduce everything by half? So take some of that off, 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 and sit there on half as much risk. Then if it goes against you, you've got half as much pain. If it goes your way, you've got half as much profit. But you've got half as much pain if it doesn't work. You always got to think, worst case scenario, this isn't going to work. When you press that button, assume it's not going to work. If you're sitting there and that's 8% drawdown, why not make it 4% drawdown? You've got an opportunity to do that now. If it goes down to there at 8% and you had an opportunity at 4%, you'd be kicking yourself. I would much rather reduce my risk. That trade has not worked and it's giving you an exit. It's letting you out. It's saying, get out. If it flies tomorrow, it flies. If it dumps tomorrow, it dumps. It's your decision. I can't make it. Any clue what the blue screen with a frowning face starting your PC ran into problems and needs to restart on Windows? Yeah, it means your Windows is buggered. I've had that before. It's called the blue screen of death. Look it up. Blue screen of death. I don't know why they call it the blue screen of death. They just do. Blue screen of death. Comes in many guises depending on which version of Windows you're using, but that's the blue screen of death. That one is the one you've probably got. Your PC ran into a problem and needs to restart. We've no idea why. We'll just restart and hope it doesn't happen again tomorrow. Your PC ran into a problem. You've got a problem. Most of the time when that happens, it's either GPU or hard disk related. It's a sign of hard disk failure a lot of the time. Every time I've had it, and you know, there's lots of people that will go, you can fix it. Most of the people that you can fix it, you need to download a piece of software. Everybody's got a way of selling something. I don't know, but yeah, it's not good. Blue screen of death. I had it a lot with my graphics card. My graphics card drivers were out of date, and what happened was I updated my graphics card drivers, and since I updated my graphics card drivers, every now and again I got a blue screen of death. So I rolled my graphics card drivers back, and it vanished. So it was to do with my GPU. It's usually GPU or hard drive, in my experience. But your words are true and funny. Cool. If only people listened. Even better. Yeah, they do. Some people do. The same names I see coming up in here every day, and have been coming up in here every day for months. They're listening. The people that don't are off looking at Lamborghinis via Nirav and Greg Secker. They will come back here at some point in 5 years' time and go, you know what you said 5 years ago? You were right. I know that because I've been there and done it. If I'd have come back to myself 5 years ago, I would have done that. The reason I haven't de-risked is because I'm down 3% on it in closed drawdown. Okay. So if I close some out, I'd have to have it go further to overall break even. But AZ, you have anything you have in your closed P&L is your closed P&L. It's happened. Yeah. Forget it. I closed out yesterday, pound yen. Was that the right thing to do? No. It's happened. I'm not sitting here kicking myself about it. I couldn't give a monkeys. I banked money. If that had been a loss and then it had done that, that was yesterday. This is today. Right now, you have an opportunity to stop yourself going into 8% drawdown tomorrow when the unemployment rate comes out as a negative and the US dollar crashes. Or a positive. Yeah. What happened in the past, the fact that right, this is the important point. The market doesn't know you. It doesn't owe you anything. If you have closed out a loss, you do not get owed that by the market. If you have made a loss, the market doesn't owe you 3%. The market owes you nothing. Right now, you are sitting at an opportunity to get out of a position, or you've got an opportunity to go into drawdown, or an opportunity to get back what it gave you. That's revenge trading. You're asking the market to give you back the 3% it took from you. You closed that 3%. You've taken that loss. If you chase that loss will kick you in the arse. Do not chase losses. If I'm sitting with a negative P&L here, it will not influence my decision there. That's happened. This is now. This is today. This is what I've got to deal with. What happens down here? There's an argument for not having it. You can remove it if you want to. You go into the Trade Manager dashboard and you don't want to see that. Make that 900. Gone. It's moved off the chart. Yeah. What's happened has happened. This is your life here, right now. This is what you've got to deal with. Yeah. There's a saying, you're only as good as your last month. Bollocks. You're not as good as your last month. Your last month was your last month. You're as good as this month. Yeah. You're only as good as your last year. You're only as good as your last quarter. No, you're not. That was your last quarter. You're as good as this quarter. This is January 2024. What happened in the last quarter of 2023 is irrelevant. I'm not even looking at it. I couldn't give a monkeys. Doesn't matter. Right now, I'm in 5 positions. What I've done this month is irrelevant. I'm in 5 positions. Got to deal with them. Yeah. Try not to dwell on the past. It will kill you. Really, really has nothing to do with anything. It will influence your decisions. If you're sitting on 15%, right, and you see a setup arrive and you go, cool, that looks good, but I might lose some of my 15% if it goes wrong, you won't take that trade. Will you? Because you want to protect that. That is opportunity to make money. That has happened. Well done. Good job. Forget that. It's not happening now. This is happening. Yeah. Right now, you're at break even on the US dollar CAD after having sat through it for an absolute age of gone into 8% of drawdown and crapped yourself. What do you think you should do? Try and grab back that 3% the market owes you, or start again? Up to you. I can't make the decision. You have to make the decision yourself. But think about all the angles. Windows 10. Brian, still on Windows 10? You know, they put another 1 on the end of it now. Are you running a desktop in your live room from your MS Surface? Am I running a desktop in your live room or your MS Surface? No, this is not my Microsoft Surface. This is my gaming PC. This is my i9 64 gig, 32 gig graphics card machine. I had to think what that was then. I feel a website being fixed shortly. I could fix a website. I'm not going to fix a website. I recall least, what's the time? 20 past 4. I recall least stating that your goal shouldn't be to profit on every position entered. Once you realize you're wrong, you get the chance to get out, get out. Yeah. You only, you have to see this as a, you have to take the portfolio approach. And one of the problems with position trading, which is very hard to get around mentally, is when you have a position in large drawdown, it's very hard to take more positions because your fear element in your brain is saying, but what if that one goes into drawdown? And if I take another one, what if that one goes into drawdown? And what if this one goes further into drawdown? And there's that fear of getting in, not fear of missing out. It's just fear of getting into the market because of what the current situation is. The problem with that is all these ones that you're fearful about taking may well be the ones that get you out of the one that is the problem. And we always have this, I need element in trading. I need this to get to 0.25%. You don't need it to get to anything. You need it to be green. It owes me 2% because that's what I've done in drawdown control. No, it doesn't owe you anything. You are lucky to get out of that 4-week position with 2% loss. That is your position. A 2% loss over a 4-week trade. Everyone else has lost 25% of their account on that squeeze. You've got back to break even or 2%. You're 99% better than every other person out there because you haven't taken the loss. You've taken a tiny, tiny loss. How easy is it to make 2% a news event? Yeah, tomorrow, I've got US exposure short. If that news drives the US dollar 200% ADR down tomorrow, I'm going to bank 1.5%, 2%. If I was owed 2% by anything, I can get that back in 1 hour candle on a news event. Don't worry about what's happened. Worry about what am I going to do with this tomorrow when the news happens? Because this is your life. This is what you're using. This is what you're trading now. This is your capital. This is your business. Businesses don't go, we've had a bad quarter, double your prices. Businesses go, we've had a bad quarter. Hopefully it picks up. It hasn't picked up. Let's do something about it. Why we had a bad quarter? Analyze all this sort of stuff. but don't dwell on it because it's got nothing to do with what's going to happen in the future. Same as a candlestick going long is not going to go long tomorrow. It could go long or short. It's a 50-50 chance every day. US dollar CAD tomorrow, it could go up or down. We've got a big news event coming tomorrow. But that's the decisions you need to make. If you're trading as a business, then your loss is just operating expense. Yeah, exactly the same way as your drawdown is. Your drawdown, your open drawdown is your capital, is drawdown into your capital expenditure. Losses are losses on your P&L. This is why we have a P&L, a profit and loss. It is a business. It's a profit and loss. Yeah. All charts in businesses look like that. The S&P 500 is business. This is the most business chart you will ever find. What does this mean? It means that the businesses, the top 500 businesses in the US, their share prices have been rising for a month because they're doing well. When they're not doing well, the share prices drop. When they're doing better, their prices go up. Yeah. The S&P does this. And it will do that forever because businesses will adjust and make themselves do well. You have to do the same thing. But what businesses don't do is go, that product was a flop, let's keep selling it. That product was a flop, get rid of it, make a loss on it, let's start with a new product. Same as your portfolio. Get the loss, it's happened. Can't do anything about it. S&P is still rallying nicely. I've just got an aggressive exit on this, just suddenly seen. So we're out. TP's hit on both of these. So sell stop trailing on the Dow, looking to get out on a pullback. And I am already pending orders triggered on the NASDAQ as well. So both of these now aggressive trades triggered, ready to go short. So if this continues to run, it continues to run. So I've banked $500 and $500 there. So you can see now the aggressive, rather the loss recovery target is $165 and $149. So the EA will now try to get me into a position of $149 profit, which is 30% of the banked amount. And this one obviously is just still in profit trailing. So there we go. Targets hit. So that propulsion gap on the Dow is now complete. So we got that high and that high at ADR. So if it continues to push up to ADR, we'll keep trailing and we'll wait for that pullback. And I've got to go out in a bit, so I'm going to have to disappear because I'm just waffling this afternoon. I was waffling this morning as well. I feel like I've been waffling for 3 days because I haven't done a live room for 2 weeks. And you can claim operating expenses upon tax time. Yes, it doesn't quite work that way in trading, but it would be nice. That's well, you pay tax on your earnings basically, which is your profit. So, what are the 8 pairs you are trading on the new Hedge EA? They are Aussie CAD, Aussie Swiss, CAD yen, Euro US dollar, pound Swiss, pound New Zealand, and pound and New Zealand US. These ones should have just opened the spreadsheet. You can't see it. Probably can't see that anyway, can you? Too small. I'll explain it all when I get it set up, but just basically making sure I've got no more than 2 exposures on any currency at any time. Yeah, so I've just realised you've read them out. I was reading them from my list. Yeah, Aussie CAD, Aussie Swiss, you've missed. CAD yen, Euro US dollar, Euro yen, pound Swiss, pound New Zealand, and New Zealand US. Yeah, that's it. So the only one you're missing is the Aussie dollar CAD. So if the EA opens an aggressive exit, is a stop loss set so that if it reverses, it closes that recovery attempt? No. It's one shot, one entry, exit strategy. This is the aggressive exit. There's 3 ways you can get out. Yeah, all covered in the video. You can have conservative hedge exit set to false. And basically what this will do is if it hits your TP, it will just do nothing at all, but wait until market close, and it closes out. And it closes that loss, that hedge, at whatever it's at. Yeah. The other exit is your conservative exit with profit, which is where it does exactly the same thing. But if price pulls back and it gets to your loss recovery target, it closes your short position and banks you that money. The aggressive exit, which is with that set to true, so true and true, what that does is it places a pending short order in the market to add to your losing trade, to dollar cost average into the position. Yeah. Don't forget the reasoning behind us moving our take profit on a hedge to 5R is that we should be very close to ADR when we get out of our long in this case. So the market is due a pullback. That's why the aggressive works so well. And when you get that second entry on, you will find once that's triggered, it will only need to get down to somewhere around about there and it will hit your target, because we are reducing drawdown on the losing position and we are adding profit on this winning short position. So it doesn't have to get back down to here. We're only looking to take a percentage of this profit. Don't forget, we've already banked $500 here. That long, we've banked 500. We're up 500. This one, we're up 550. Yeah. So for this to come down now, I just need this net profit number to be anything above 0, and I can get out of this with no loss whatsoever. But I don't want to do that. I want to make money. So you can set it so that the aggressive hedge exit loss recovery target is 0, and it will just go, that hedge didn't work, get me out of break even. If you want to, take a break even on it. Don't take a loss, is basically all it is, isn't it? So that's triggered, short. So for me now, what I'm doing is watching this. Yeah. So I'm watching this basically now to see what price action does. If price suddenly starts to scream away, I will re-hedge it manually. Or, depending on what my day's like, I'll let it run a little bit. But the thing you've got to bear in mind, and this is why it's called the aggressive exit, you are now 4 short, not 2 short. Your drawdown is now twice as fast as it was before. There you go, we're in profit. I'm just going to close the S&P out. Just banking that totally $200. There you go. So that now is in $20 of profit, $40, $60, $70. Your choice what you do with it, but you can close it right now. In fact, I'm going to do that. There you go. Closed out. Okay, so banked, overall banked $70. Yeah? So that one worked, $200. That one, loss recovery, $70. That one is sitting in $190 of drawdown. Now that's triggered the short as well. So overall, if I close that now, that's an overall win. Haven't lost any money today. We've made money. We had 2 hedges, got 2 trades wrong, 1 trade right, and we've come out of it with a break even as it stands now, plus the $500 I made this morning. That's how the system works. You could leave that, because this thing could push down into propulsion now and make you an absolute fortune. But that's not the idea of the strategy. The idea is we lock in a hedge because we don't know which way price is going, and we wait for price to get to an extreme that we're going to pull back from. And the reason I picked that level was because of that. Remember what I was saying earlier when I showed you in the strategy tester? All price does is move from support to resistance, and it bounces from resistance because there's limit orders there. We know they are because they sold it. Therefore, they place orders to do the same thing again, to see if they can do the same thing again. If they can't, they flip and they go the other way. That's what the banks do. That's all the algorithms are doing, placing limit orders at areas of previous price action. As long as you know where the price action is, in the form of propulsion gaps and support resistance levels, all you need to do is take trades at those areas. But I'll watch that one now because that one might run away. We'll see. Big, but you look at this. We've been buying for 3 hours solid. Yeah, similar to that. Going to want to rest a little bit, isn't it, at some point? That's what we're playing on, the fact that they're going to rest now. I don't know if I'm going mad, but my broker doesn't seem to let me close out part of an order. So all you do is you double click on the order. Yeah, you've got modify order, which you can't do anything. You change it to market execution, and then you can adjust the lot size to whatever you want, and then press close, and it will close that percentage out. So change modify order to market execution. Seems SIH might not be ideal for someone with a day job. Yeah, no. There is no, remember, there is no strategy. There is nothing that's good for you if you've got a day job. If you've got a day job, you've got a day job. If your day job is trading, day job is trading. If you want to do this part-time, you have to trade hourly charts and above. You can't trade 5-minute charts if you've got a day job. 4 hour, hourly at a push if you've got access to terminals at work. But you can't trade 5-minute. You can't scalp. This is a scalping strategy. We are scalping. You can't scalp when you're at work. You can't do it. IC markets only allow 1 lot for indices. Yeah, don't use IC markets, Harold, if that is the case. If your broker does not let you trade micros, i.e. 0.01 lot increments, change broker. They are a crook. They're forcing you to over leverage. You should not, in this day and age, need to trade with any broker that does not allow micro lots. They've been doing it for decades. What lot size does the EA use for aggressive recovery? Same as the initial entry. So if you're here, look, 2.07 short. We're 2.07 short. Yeah, there's no martingale or anything at work. It's literally a case of let's see if we can get in on the bounce. You don't increase the lot size. It's the same. You could, but what if it goes wrong? Don't forget, we're not trying to make a fortune. We're trying to escape the position. Our purpose of this is recovery. We've lost. Yeah, we got hedged. The trade didn't work. Our job is not to make money. It is to make money, but our job is to try and get out of this. Yeah, we're trying to recover the loss. That's why it's called a loss recovery target. We're not trying to make a fortune. We're trying to recover our losses. So if you go in super aggressive with, like, instead of 2 lots, going with 3.5, 4 lots short, that's trying to make a load of cash, isn't it? It's aggressive. Right, I've got to go because I've got to go out. And I've been here for like 2.5 hours. So I'll be back tomorrow morning, same time, 7:50 for the Frankfurt session, 2:24 New York. Going to monitor this. So I'm 270 up. I got 225 running on Hedge at the moment. So I will probably give this, considering I made 500 this morning, I'll probably give this something in the region of $375, $400. If we get to $400 in drawdown, I'll re-hedge and have to take a hit on this one today. But hopefully we'll get a push down. We'll see. So yeah, back tomorrow, same time as usual, 7:50, 2:20. And yeah, all this lot is just still playing out at the moment. So news tomorrow, we've got obviously all the New York stuff with non-farm payroll, unemployment, and CAD. That is an hour before market open tomorrow. So we'll have all of that information by the time we come into the live room. And then half an hour after live room, we've got PMI services. So it might be a very tricky open tomorrow. Depending on how today goes, I might decide not to trade the indices tomorrow, because if we've had a massive movement off of the unemployment claims and we've got to wait for PMI for the next move, that half an hour from the market open at 2:30 up until 3 o'clock is going to be probably a bit like that. So we'll see what the market's done during the day, and that will obviously depend on what the news has happened. So if you've got any US dollar exposure, obviously bear in mind, if you're not coming on until tomorrow afternoon, you want to be paying attention to that. Okay, so have a good evening. I'll be back tomorrow morning and tomorrow afternoon as usual. And if you need anything, I'll be in Telegram. Other than that, I'll see you guys tomorrow. Have a good one.